Over the past quarter, investors have had a lot to navigate, and I realize I probably say that often, but this time it really does feel warranted. Here at home, we've seen a government shutdown, uneven economic progress, and continued uncertainty around the Fed, both in terms of leadership and the path for future rate cuts. At the same time, questions around AI have shifted to a more nuanced debate about where we are between hype and reality. Layered on top of all that, we've also seen new developments in foreign policy, particularly involving Argentina and Iran. So there's certainly no shortage of topics this quarter, but for this video, I want to focus specifically on geopolitical events, how investors should think about them, what they may or may not mean for portfolios. I'll also touch on the ongoing conflict in Iran, with the important caveat that the situation is evolving and could change between now and when you're watching this. As long-term investors, our message during periods of market volatility is intentionally consistent. Stay disciplined, stick to your plan, and when possible, look for opportunities within that volatility. That can be easier said than done, especially when volatility is tied to geopolitical events. These situations often carry significant human, social, and economic consequences, and those should never be minimized. Our goal isn't to tell anyone how to feel about these events, but rather to help put them in context from an investment perspective. If we take a step back and look at history, we can see that markets have navigated a wide range of military conflicts over time. These events differ in scale, duration, and impact, but from a broad perspective, markets have shown a consistent ability to move forward and higher over the long run. Looking more closely, while there is often a negative reaction in the very short term, particularly in the first week, returns over the medium or long term have actually tended to be slightly above average. The one exception is the 3-year period, and that has more to do with specific overlapping events like the tech bubble than with geopolitics alone. It's also important to note that these observations are based on US large cap equities. Other areas like international markets, fixed income, currencies, and commodities can react very differently. We've seen that play out recently with oil prices in response to the conflict in Iran. At one point, WTI crude had moved higher by nearly 80% from pre-conflict levels. Moves of that magnitude in such a critical commodity can create ripple effects across the global economy and are a key reason why markets experienced increased volatility and weakness in March. So what does all of this mean for investors? At a high level, it reinforces the importance of staying grounded in a long-term plan. Periods of stress and uncertainty don't impact all assets equally, and that dispersion can create opportunity for disciplined investors. While geopolitical events can feel unpredictable and unsettling, history suggests that reacting emotionally or making abrupt changes to a portfolio is often less effective than maintaining perspective and using volatility to your advantage. As we continue to monitor the situation in Iran and other global developments, we'll keep evaluating potential implications for markets and portfolios. But as always, our focus remains on helping investors navigate uncertainty with a clear, long-term approach. Stick with me for our second video, where we talk more specifically about the Iran conflict, oil, and financial markets.